Hello and welcome guys. Today we're going to be looking at the arguments for and against Bitcoin as a safe haven asset. So in recent months we've seen a general spike in global economic instability, and a little over a week ago the Federal Reserve, as we know, took the initiative to lower interest rates in order to combat the failing economy. So this kind of action is usually only typically reserved for a recession. And on top of this, we've seen a plethora of national currencies being debased by the actions of their own government. Most notably, of course, was the recent devaluation of the Chinese yuan, which appeared to be in direct reaction from Trump's threat to increase tariffs upon China. And then we have Brexit, which at this point can only be described as an omnishambles, with Boris Johnson steering a sinking ship into a no deal, which will look to deplete the pound further. And due to this, we saw major stock indices fall as investors jumped out of those and into safe havens. Interestingly though, Bitcoin has been correlating nicely alongside safe havens such as gold and the Japanese yen, leading some to believe that it's now being used as an accepted form of safe haven in its own right. So this has been highlighted by several analysts of late. One example is Tom Lee, who noted that Bitcoin's broken its inverse correlation to the equities market and gained a further positive correlation to gold, proving that it's becoming a good hedge against global risk. So Lee went as far as to call Bitcoin an authentic institutional source of diversification, a classification that in his mind would help BTC hit new highs. By the way, I'm not playing these clips because, as it turns out, CNBC love copy striking us, so that's great. Anyway, similar to Lee, CNBC's Brian Kelly noted that Bitcoin is being traded like a macro asset, but he does caveat that this has only just taken effect this year. And both Lee and Kelly seem to be on the money here, because providing firm evidence of Bitcoin's status as a safe haven is its tighter correlation to gold, which has gone from 0.496 in the past year to 0.827 within the last 3 months. We also had the economist Raoul Paul weigh in, suggesting that thanks to the poor health of the FX market, we could be on the brink of financial crisis. And he went on to advocate an investment into Bitcoin and gold as a result. But some actually disagree that Bitcoin is being used as a hedge, especially when it comes to Chinese investors. Instead, they posit that the positive reaction from Bitcoin is simply speculation of capital flight rather than BTC being used as such. This is also highlighted by Peter Schiff recently, who fired shots at CNBC for shilling Bitcoin and propagating this narrative. He also noted Bitcoin's price withdrawal, citing that it had retraced 15% from a recent high on the 26th of June, despite the worsening economic climate. And of course, he's correct, but he does seem to be ignoring the fact that Bitcoin is up 200% from the start of the year. 15% in comparison to that is pretty lame. However, providing a little bit more damning evidence than this was Dovey Wan, who relayed that there's no premium for Bitcoin in China at the moment, and therefore seemingly not much demand. In fact, a few users actually did their research and found out that Bitcoin was trading at a negative premium of 1.35%, which does seem to indicate that there isn't much demand as there was first made out to be. But still, these points don't disparage against the fact that Bitcoin is still a useful hedge against global risk. And even if hordes of investors aren't using it as such, this will likely change in the future, especially if we see fiat currencies degrade at the rate they currently are. But that's all from me. Let me know what you thought in the comments below. Give us a thumbs up if you enjoyed this video, subscribe for more content, and I'll see you soon.